Hello and welcome to another edition of 9 to 5 Live. President Macron's decision to call snap parliamentary elections in France has given capital markets an anxiety attack. Francois, hello.
Hello.
Nice to see you. Thank you for joining us. First of all, French markets down quite sharply last week after the announcement by President Macron. What is spooking the markets?
What is spooking the market is that the alternative and what seems to develop in terms of forecast for the future parliament in France is that Mr. Macron has made a bet that he's going to lose and that you will have an alternative which is between the Rassemblement National coalition to come to power or the Nouveau Front Populaire, because the Nouveau Front Populaire emerged last week. So at the end of the day, it means that continuity is disappearing. It means that you have risk because in terms of financials, when you look at the program of the Nouveau Front Populaire, it's very, very expansionary in terms of spending. And then in terms of the Rassemblement National, you have a lot of doubt about the ability to fulfill the program they are presented. And if they do so, it means that there will be a hole in the range of 100 billion to finance the program that they had set before the election.
As I understand it, in France, the political system is now with one central party that is relatively powerful, and then there's nothing between them and the extreme on the right and the extreme on the left. There's nothing really moderate between those three entities, really, is there?
The reality is that Macron was very disruptive. He's the one who benefited from his ability during the 2017 campaign and in 2022, his ability to really create a shock, and really it was on the right side that he has been able to, quote unquote, destroy the right. So you had a center, he developed a center to the right kind of political party, which was Renaissance, which is Renaissance. And then you had the extreme right that came out. And then you had NUPES, which was a kind of combination of different parties. His bet was his ability to maintain this center. And this center had a relative majority in parliament. That was the result of the presidential election, no absolute majority, and created a lot of problem for the French president to govern. And so what he was trying to do is to make this center even bigger. But his bet is completely tumbling. It's going to be a catastrophe because the Rassemblement National is leading the poll. European results 31%, and they are going to maintain that. And then you have the emergence of a united front on the left. So at the end of the day, it's the center who is going to disappear from parliament with the result of the future election. Don't forget that in the French system, it is not a proportional system, it's a majority system. When you have the first round, only the two candidates that are leading can stay, or a third can stay if he reach 12.5% of the vote of the total people that are voter in the region. So it's going to be very difficult for Macron to maintain his candidate for the second run. And in the second run, you will see the extreme right and extreme right and left fighting for the win.
Okay, good point. Yeah. Let's take the capital markets individually now. Let's look at bonds. French bonds widened to German bonds by 25 bips last week. That's a pretty big move. Hasn't happened for a long time. What is the market looking at when it creates this kind of disparity?
The market is looking at one thing. We all know that the French financial conditions were difficult. Budget deficit is excessive. They have a huge increase in debt. And it was already an issue for the Macron presidency and for the government of Gabriel Attal. It was a key issue in the result, to my point of view, in the result of the European election, because it gave the sense that the French are not mastering the finance. And so it means, okay, let's try something different. It's part of the choice. It's not going to improve with the future government. If it's the left, as I told, it's going to be spending a lot of money and it's going to be very tough. If it's the right, you could have doubt about their ability to improve the situation. So what the market is looking is to say, okay, we have a close to 80 basis point spread versus the bond today. Are we fairly compensated for the risk we take with the French finance? And for the time being, people are saying, no, we are not. There is a danger. So we want to see a higher compensation to justify the holding of French debt. So so in a way, people want to have safe haven, and they consider that the French debt is not a safe haven. You need to take into account that the German situation in terms of politics is not going very well either, because the German government lost the election, and you have a lot of fight in the coalition today. One big question you could have medium term is, are we going to see a vote of confidence in the German parliament? This is something that you need to keep in mind, because there is a lot of division among the different parties of the coalition in Germany. So all in all, once you have taken the French situation, people and investors are thinking that, Europe is in deep trouble because maybe we will have German election. The French are in bad situation. So there is a kind of risk-averse mood that is developing on the bond market and the French bond market is the victim.
Coming to French stocks now, the CAC 40 was down 6% last week, and every component of the CAC 40 on Friday was in the red. Banks are especially being hit. Why are the banks being especially focused on?
First, because, with the monetary policy and the way it was built in Europe in the course of the last 5 to 10 years, you have a lot of government debt in the balance sheet of French banks, and especially French government debt. That's the first reason. If the French government debt is under pressure, it means that potentially you have some loss on your balance sheet, and this is not something good. Second point, higher interest rates is never a good thing for banks, especially when it's the full spectrum of interest rates which are going up. So it is something that is weighing on the quality of French debt. And it was the first victim because it was the obvious victim of any way of playing the political risk. And so that's the reason why they suffered so much.
So banks aren't the only one under pressure. The luxury stocks are also going down. Isn't that creating opportunities? Why are the luxury stocks going down with everything else?
I think that the luxury stocks have been under pressure for 1 to 3 months. They have been really under pressure. It's mainly connected to China, about the fact that you had some companies coming out and saying that the sales were not going to be as good as they were supposed to be. The main case is Kering with the Gucci issue, but Burberry came with some issue also. And then you have China. The Chinese market is showing signs that it is slowing down. We all know that luxury stocks, luxury companies have invested a lot in China in terms of new growth potential. It is impacting, and you have some news also from China saying that you have a lot of sales rebates that are coming for luxury goods in China, and that they offer luxury groups. Some luxury groups are offering like 30% rebates to purchase some goods. So it's the main reason. And then you need to put that also together. At the end of the day, when investors are fearing a result like the Macron's decision, on the one side, you have specific decision, like, okay, we sell the banking stocks because they are going to suffer if the government lose power, if Macron lose the majority. And then you have global impact, like ETFs. You have people who want to avoid the French market. So those two factors are playing, and I think that the luxury goods are mainly suffering from the second aspect of the story.
Is this creating opportunities anywhere in the French stock market?
Not yet, because you need to have more visibility. I think that opportunity will maybe come out from once you have the results, once you know exactly which kind of parliament you will see, when you will have more visibility. But nevertheless, you need to keep in mind that if you think in terms of medium term, you could experience a result where the Rassemblement National gets the ability to get a relative majority, let's say. They are asked by the president to form the government. what happened in a country in which you will have 34% or 31% of the population voting for the Rassemblement National, getting the government, and on the other side, you will have the Nouveau Front Populaire, getting about 30% of the votes. It can be socially very difficult. You could face a lot of strike, you could face a lot of protest, and etc. You could develop an environment that is quote unquote explosive. So it could mean that medium-term French assets could suffer a blow, and that people will need time to find ways to reconsider and say maybe there are some opportunities.
Coming to Europe, you mentioned the ambiance in Europe, which is somber since the results of the elections a few days ago. However, the euro dollar isn't reacting that much. It's down a little bit, but it's not reacting that much, is it?
I agree. It's not that much. It's up. The dollar is up. It's benefiting. It touched the 106.80 at the end of last week. Don't forget that at one point over the last few months we were closer to 110. What is interesting is the Swiss franc. The Swiss franc is the safe haven. The euro is really coming down against the Swiss franc. The Swiss franc has appreciated significantly. Remember that the first quarter of this year was a quarter of weak Swiss franc, and people were saying, you see, the Swiss franc had lost the safe haven status. Obviously, the Swiss franc is able to benefit from the political situation in Europe and this instability. What is interesting is this week we will have the Swiss National Bank deciding about monetary policy. It will be interesting to see if the Swiss National Bank reacts and consider that the Swiss franc being stronger is an opportunity for them to act on interest rates, or if they will consider that they will not act on that issue and keep the interest rates where they are until September.
Just before the election results last 10 days ago, the S&P downgraded French debt. Do you think any of these things are going to have a causal effect in Europe politically for France and for French debt?
It will at the end of the day. Everybody took the idea that there is no problem. Some of the institutions have decided to downgrade the French debt already, but this is no problem. We are in the the French are in the European Union and etc. They are safe because of the situation, the political situation will change in France. So it means something. And we also know that in the coming weeks, the European Commission is going to come with the excessive deficit procedure, and they will assess if the French and Italian are subject to this procedure. So it will be very interesting to see if the European Commission acts on that. So at the end of the day, if there is another downgrade of the French debt, the circumstances will have changed, because it will be no more kind of alignment between the government and the French president. It's quite obvious that there will be the president on one side and the government on another side. So it means more risk for any institution, and they can lower the debt, and then the market will be spooked by such a development. So we need to be very careful with the development on the rating institution and their attitude.
Do we have a date for when the European Commission is meeting and deciding this kind of thing? Do you know roughly when it is?
I think it's the coming week. I cannot give you the exact date, but I know that it's the coming weeks. It's in the coming weeks.
That's very interesting. Merci beaucoup. Thank you very much, Francois.
You're welcome.
Have a nice week. Bye-bye.
Bye-bye.